Welcome, ladies and gentlemen, to Mines and Money in Sector Global Mining Pitch Battle. I'm really happy to do that again here today, my second pitch battle. My name is Jochen Staiger. I'm your MC today, and I'm the founder and chief editor of Commodity TV and also the founder and CEO of Swiss Resource Capital AG here in Switzerland. And it's my honor and pleasure really to guide you through. First of all, we have a lovely lady here, Belinda Labatte, the CEO of Lomiko Metals. Hello, Belinda. You will talk in a second, but let me also say some words up front here. We are, like dragons, like Shark Tank, Dragons Den, and like Höhle der Löwen in Germany, as you know that, but we are much more polite. 3 minutes will be the presentations, followed by 8 minutes of Q&A of our contestants. And our contestants today, as you see already, is Belinda with Lomiko Metals. Then we have Sam Lee from Northisle Copper and Gold, Denmark, Jarvis, the CEO and chairman of Giga Metals, and then Philippe Cloutier, the president and CEO of Cartier Resources. And also we have 4 judges who are really highly professional. First of all, my good friend Florian Grummes, the managing director of the Midas Touch Consulting. Then we have Rudolph the Bruin, founder and partner of AMED Funds, and John Zadkovich, then the director of Kingseed. And last but not least, Simon Popple, director of Brookville Capital. Before we start, as you know, it's all about $1 million investment into one of the companies. This we will find out after our 4 pitches here and our Q&As. And I would suggest we get started. Belinda, if you want to share your screen, please do it now. And I will get the timer started. And then let's rock it for your 3 minutes.
Excellent. You see my screen, Jochen?
Yes, all good.
Great. It is great to be here. I'll get started then. How do we turn $1 million into a 10x investment for our new and existing investors? Let me tell you how. This is a great time to be invested in graphite and lithium. And why? The reason is this. We are a sub 15 million market cap company. Of course, we think we're undervalued. The markets are tough, but we have an NPV of over 186 million, and we are moving into a market that absolutely needs graphite. So let's talk about the right-hand side of this table here. First of all, annual growth rate of EV vehicles is 30%. What we also see is a decline of passenger vehicles that are internal combustion engine. 20 million vehicles on the road today are EV. We're looking at over 200 million that are going to be on the road in the next 5 to 8 years. And what does that mean for graphite? Natural flake graphite is becoming a severely undersupplied mineral, but it's not talked about. We are looking at an 8 times increase that is needed. And why is this so compelling for investors in Quebec to invest in Quebec is a very simple fact. We are in the middle of the best and most significant graphite belt in North America, the Grenville Belt, and we're exploring all throughout that area. Number 2, the 780 gigawatts of capacity that's coming in North America for building these battery facilities is going to count on North American supply over time. That is why Volkswagen came to Toronto. That is why Mercedes-Benz came to Toronto, because they want to invest upstream in companies just like ours to access the critical minerals. So what we can do with your $1 million is we can do a few things. We're going to show that we have a drill program underway, that we're moving our inferred resource into measured and indicated. That's the goal, is to really focus our deposit and show you what we have. Over 9,000 meters drilled, lots of news flow coming out in the fall. We've already done the metallurgical studies to show that we can feed into the anode market. As you know, graphite is complex. It has various uses, but the key is that we have a ability to purify that material to 99.9%. In addition, we're exploring for lithium in the north. We are right along the very prolific Nemaska lithium trend, and we have many soil samples and surface samples. Also, lots of news flow coming out in the fall to show what we can do in terms of drilling this lithium, tantalum, cesium anomaly trend that we have just off of the Lamar showing that already exists in northern Quebec. Again, the pricing is increasing, and we are well positioned to go into a very rich market for graphite and lithium. Thanks, Jochen.
Super. Thank you very much. That was just in time, Belinda. Thank you. Can you please stop the screen sharing and our judges come back, please, for the Q&A? Where's the rest? Florian, Rudolph, please come back. Super. Okay. So now 8 minutes for Q&A. Who wants to pose the first question? Simon, please.
Yeah, that was great. Thank you very much. My understanding is that car manufacturers want offtake agreements like today. How close are you to being in a position that you could actually agree an offtake agreement with someone? Is that something that is sort of on the horizon or in the near term, or is that more medium term to long term?
Well, it's a great question, and I'd say, you know, there's so much momentum and velocity in this building of the new North American EV supply chain, or ex-China, that where I would have thought that these would be conversations we would be having later, that's not so. They're approaching us now. And Lomiko, myself, I was there at the event when Volkswagen came to town to sign their MOU, when Mercedes-Benz came to Canada. And what is that MOU designed for? Specifically to invest upstream in critical minerals. And so they did approach me. And what I'm seeing is that the demand is so significant, and the undersupply for North American supply, because importing natural flake graphite is heavy and unwieldy, is going to become important. So I see it as us coming together, two tracks. They're going to be looking at us to see what kind of a resource we have and the metallurgy. And it is our job now to do more metallurgy work, which we have more work. We have a 700 kg sample with SGS Labs to feed into the PFS work, which is also going to show even more characterization around the natural flake graphite that we have. So far, we're extremely pleased with the results. And with that technical spec sheet, Simon, we're going to go out and talk to Volkswagen, Mercedes-Benz, and all the other battery manufacturers in the fall.
Thank you.
Next one. Don't be shy. Rudolph, please.
Yeah. Belinda, I didn't quite get on which stock exchange are you listed?
Yeah, I did not mention that. We are listed, we have the OTC listing in the US. We are also on the TSXV, and we do have a listing on the Frankfurt Exchange.
And what is your market cap? You said below
we are trading,
50...
call it 12 million, and, you know, moving in around that number through the summertime.
Yeah.
And our NPV is 186 million. So you could see that lots of traction and re-rate possibility for us.
And on the resource, you mentioned that you were busy drilling, or you're going to drill for your third resource, which I assume you've already got 2 resources. Are they, are they code compliant?
Let me clarify that. We've been drilling all summer at the existing resources. The deposits are named the EV zone and the battery zone. That's within the PEA. And they are going to be NI 43-101 compliant. So what the objective there is some extension drilling, a lot of infill drilling. We have found that below the marble contact, where we'd never put a drill there before in the past, or the previous management team had not, we're finding graphite. So it's really about finding out how much graphite we have within and below the pit. And then we will be showing assay results as we go, going into September in the fall. And we have retained a firm for a NI 43-101 resource, which would be coming subsequently.
So that 43-101 will be the first code compliant resource?
No, it would be an update on the current resource. We do have a compliant resource now, which is 43 million tons of inferred. And we have 23 million tons of indicated. So about 2/3 of our total material is in the inferred category. And that's why it's so important. It's such a great opportunity for investors to be part of the re-rating as we move that into the M&I and work towards PFS.
John, you raised your hand also.
Thank you. Thanks, Belinda, for the presentation. you're pushing an open door, I think, insofar as the appetite for commodities such as graphite and lithium. Taking the position that investors typically invest in people, could you please give us a bit of colour as to the board and the management, in particular, their experience in the EV space?
Okay, excellent question. We actually are a people first company. We came together because we believe in the opportunity. We believe in the hard work that's necessary. A lot of people are still new to graphite. And my team, so I'm the CEO, we have a CFO and a COO. We all came in as one of the few full-time management teams in juniors, all coming from large business operating companies. I've worked for producing gold and silver antimony business before this. Gordana, as COO, has developed mines, been involved in producing mines her entire career, over 25 years. And in terms of EV experience, well, unless you're a Chinese national, all of us are pretty much new to it. We are all creating this new industry in North America. And I think that we have a lot of work to do. There's been a lot of graphite companies around that have older PFS studies that were done several years back, and the market wasn't ready for it. We should have been developing these projects earlier, but we had our eyes somewhat closed, and now we have incredible momentum. So I think from your question, we have a wonderfully diverse board that I want to highlight. We have First Nations representation on the board. I have an advisor who is working with me, and she's from the community where this graphite is located. This is unceded land. Anybody investing in critical minerals needs to understand land acknowledgement and treaties and so on, particularly in Canada, in the USA. So we do think that's important, and we're well positioned for that. We have a great board, highly strategic, M&A experience, mining experience, First Nations, working in Quebec, and whatever new talent we need, we will find it in Quebec and elsewhere. I hope that answers your question, John.
Yes, indeed. Thank you.
Yeah. Yes, Florian.
One quick question: how well funded are you at the moment, and when will you have to come back to the market for another financing?
Yeah, I think you're hitting on one of my bigger manifestations that I want to put out there. Is we need much more capital going into Canadian resource companies like ours. We need it coming in at earlier stage, and I have a lot of relationships with institutional investors, but we need them to invest in PEA level, not just feasibility studies. So the answer to your question, we have just over 5 million in cash in treasury right now. We have deployed that for drilling, exploration, and metallurgical work, as well as environmental baseline. And we will need to go to the market to take us to the next level to support the PFS studies that are underway. And that's what we're going to be doing in the fall on the back of these great results we expect to see from our drilling.
Thank you very much. Those were your 8 minutes. Thanks to the great questions and good answers here from Belinda. Thank you. So
Thank you.
I need then, as the next contestant, you guys can switch off your screens. Sam Lee, President and CEO of Northisle Copper and Gold. Sam, please switch on your screen that I can see you, Sam. Are you there? Yes, it takes a bit longer. Okay, super. Yeah, so when you are ready, you want to share your screen, I presume also, then I will start your 3 minutes.
Okay, very good. So Northisle Copper and Gold was founded on the simple premise that the world needs a lot more copper to urbanize, electrify, and decarbonize. Copper is the ultimate electrification metal, and what we have here at Northisle is an exceptionally levered opportunity to copper, coupled with a massive gold exposure through our large, low-risk porphyry deposits located in British Columbia, which is one of the world's most attractive mining, exploration, and ESG jurisdictions in the world. Understanding our value is our preliminary economic assessment with first quartile all-in sustaining costs and moderate capital intensity, generating a $1.1 billion NPV after tax, assuming only a $3.25 per pound copper and $16.50 gold. At $3.50 and $1,800 gold, the NPV jumps to $1.4 billion. Our project is highly levered to both copper and gold prices, and our excellent infrastructure with roads, ports, and power indicates that we'll be insulated in part from the wild cost inflation that projects in less developed areas are seeing. We have a great team with over 200 years of experience exploring, developing, operating, and financing world-class mines in the Americas. On a congratulatory note, our chairman, Dale Corman, was just recently inducted into the Mining Hall of Fame for developing the Penasquito mine and selling it to Newmont Gold Corp for $1.2 billion, a mine that is, to this very day, one of Newmont's top assets. Finally, we have a fully financed $7 million exploration program spanning a 50-kilometer porphyry belt, which includes 7 identified targets on the property.
Fantastic.
So the most compelling reason to invest your $1 million in Northisle is a tremendous potential for re-rating based on fundamental valuation, as NCX is currently trading at less than 0.1 times its net asset value based on independent analyst consensus estimates. That is, you get a $1+ billion copper and gold project as defined by our base case PEA with over 5 billion pounds of copper equivalent for less than $40 million. And you're getting the metal price upside and exploration package for free. We have a strong cash position with over $9 million, which fully finances our exploration program and development program this year. Management and the board have skin in the game, owning approximately 20% of the company. And we recently welcomed Michael Gentili as a strategic investor who has amassed up to approximately 10% in the last year. The street has been very supportive with 3 independent analysts currently covering the company with very favorable ratings, and we have significantly outperformed our peers over the last 12 months. Thank you very much for your time.
Thank you. That was super perfect in time. Thanks, Sam. So our judges, please come back with your screens so that we can start the Q&A. There are some more missing. Florian, Rudolph. Can you please come back? Okay, then let's get started. Maybe it's a technical problem. Okay, Sam, it's your 8 minutes with the Q&A. So who wants to pose the first question? John?
Sam, thank you for the presentation. You touched upon 2 points that I just want to get a little bit more context as to. One, you mentioned you've got good infrastructure, and you talked briefly as to certain of that. I'd appreciate a little bit more detail. Secondly, you've talked about your copper having 5 billion plus copper equivalent. I didn't quite catch what you've got by the way of gold resources. If you could also elaborate on that for me too, please.
Sure. Thanks, John. So in terms of infrastructure, we're about 25 kilometers away from the historical BHP Island copper mine. These are all accessed by paved roads. There's 2 substations. There's Port Hardy, which is less than 7 kilometers away, which house BHP's 500 direct and 2,000 indirect workers. So that there's no camp. It's literally a 30-minute drive on a paved road to an existing mining town. The port that BHP use that we're contemplating using, again, only 25 kilometers away, is the closest deep sea water port from continental America to Japan, which is where BHP sold its copper and moly concentrate. In terms of people, obviously, we deal with 2 First Nation groups directly and 1 indirectly. Our communities are all very supportive of this. BC Hydro, obviously, clean power, which is critical for Category 1, Category 2 carbon emissions, would be 100% supplying our power. And then there is one of BC's largest wind farms just to the north of our property. In terms of the $5 billion copper equivalent, approximately 64% of our revenue exposure is copper, and approximately 30% is gold. So think of it as 100 billion pound copper producer for 22 years with a 100,000 ounce recoverable gold component byproduct for 22 years. So a pretty astonishing gold credit.
Thank you.
You're welcome.
Who wants to be next? Rudolph, please.
Yeah. Sam, are you probably listed on the TSX?
Yes, we are. TSXV.
TSXV. And what is your market cap today?
So as I said, it's about a $40 million market cap for a $1 billion project as defined by our PEA. So we're currently trading at much less than 0.1 times our net asset value, and much less according to our PEA.
Your copper grade, what I think you did mention that, but it went a little bit fast. What is your grade?
So our copper equivalent grade is 0.41% copper equivalent. That's including the gold, obviously. So that's higher than Gibraltar, Copper Mountain, and Tex Highland Valley, which are all copper porphyries in BC, and just slightly lower than Mount Milligan and Red Chris, which obviously are owned by intermediates and majors respectively, and are also our copper gold porphyries in BC.
Then Simon, you raised your hand.
Actually, I've got two questions. The first one, funny enough, follows on from that grade, because I thought there was, I did a bit of reading around. I thought you were exploring at the moment an area where the grade is actually higher that can bring your copper grade up. Could you perhaps just give us a bit of flavor about that?
Sure. Hi, Simon. Good to see you again. Thank you for that question. So as part of this $7 million exploration program that I identified, we're going after an area that's only about 3 kilometers north of our defined project. So along a trucking road, very close by. It's within the same porphyry system. It does have copper and gold. But the interesting part about this is the gold grade that we've hit over 9 holes is approximately 1 to 1.2 grams per ton, which is 4 to 5 times higher grade than we're getting in the global resource. It also has copper as well. It's within the copper porphyry, which is very interesting because 1 to 1.2, for most people that know, 1.2 grams per ton within a porphyry is exceptionally high. Porphyries usually see grades of about 0.4 to 0.5 grams per ton of gold. And so this is about 2 times higher than the average global grade within porphyry systems. And why is that important? Well, porphyry systems, the virtues of porphyry systems is that they are continuous, they're not unpredictable, they're kind of long intercepts. So our intercepts were over 100 meters. And so that obviously adds a lot of predictability and de-risking as it relates to our studies. And so we're very excited about that. We're looking to set out an incremental 40 to 50 million tons of resources within that context, within that grade. And that's what the majority of our exploration program is focused on this year.
And when are you looking to get results from this work?
So we're right now going through the process of permitting the drilling. And then once the drilling occurs, that should be about a 6-week program. And then results, hopefully the labs are not as jammed up as they were earlier this year, which I don't anticipate there will be because there just has been, to Belinda's point, a lot less capital afforded to the industry around drilling. So we don't think it's going to be as busy. So we are absolutely in a position of strength here as it relates to, we have the money, we've got the targets, we've got the ability to execute as quickly as we can.
Thank you. Yes, Florian.
Yes, question for me. I saw that you completed the flow-through financing, I think in June. And so I also would like to know what's the funding situation at the moment, how far will that take you? And I would also like to know how much is the institutional ownership and the free float.
Great. Hi, Florian. Good to see you again. So this was a very interesting financing, right? Because the critical metals tax actually, tax credit rather in Canada, allowed us to raise at an even more of a premium to our back-end buyers. So the buyers, the institutional buyers that came into the offering, of which there were a handful. And so our premium to that back end, we were able to raise at 60% premium because we are focused on what the federal government in Canada has identified as critical metals, copper, of course, being the most critical of those metals. So this was an exceptionally attractive financing for us. As I mentioned, from an institutional side, well over 90% of it were institutions. So we are amassing our institutional exposure. I'm not going to name all of them, but there were 3 of them that were extremely well known. Sprott remains our lead institutional investor. And as we continue down this path, we are obviously going to amass more and more institutional behavior and interest. Like, just so you know, to provide a bit of context, I was just at a meeting with a number of major intermediate companies, and they believe that come September, institutional investors will be back at their seats and really be focused and primed on really mispriced opportunities. And so we're hoping to obviously access that very quickly. Does that answer your question, Florian?
Yes, maybe you can also say a word about the free float.
Oh yes, the free
But
float.
fast,
So,
please.
pardon me?
Fast, please.
Okay, sorry. Institutional investors is approximately 11%. Insiders are over 20%. Michael Gentili is about 10%. High net worth is about probably 20%, and the remainder is retail.
Thank you very much. Great questions, great answers. Fantastic. So please, guys, switch off your screens again. And I need now Mike Jarvis, please, from Giga Metals. Mike. Sam, can you please disconnect? Thank you. Yeah, Mike, hi. Now we have Mike Jarvis here, the CEO and chairman of Giga Metals. And Mike, if you want to share your screen, please do it now, and then we get started for the 3 minutes.
No, Jochen, I think I'll just talk.
Super, perfect. Then please, floor is yours.
So welcome to everybody. I'm CEO and chairman of Giga Metals and have been since 2004. I've been working on this project. We are a giant deposit of low-grade nickel and cobalt and sulfides in British Columbia. We will be updating our resources soon, but on the old model, we've got in round numbers about 1 billion tons in measured plus indicated at an average grade of about 0.22. And then we've got, roughly another 1 billion tons in inferred. We've got a PEA that modeled average production of about 33,000 tons a year of nickel in a concentrate that's 18% nickel, 1% cobalt, with a 37-year mine life. So truly a giant deposit. And we've got, sort of the usual problem of a very small company. I think our market cap is about 35 million or so right now. With a giant deposit, this is would be 1.4 billion. And then phase 2 would be another, $500 million. So in round numbers, about $2 billion to get this thing built. How does the little company do that? You can't just keep endlessly diluting your stock, or there'll be nothing left for the shareholders. So our strategy has been to pursue involvement, investment at the project level, because that's simply less dilutive. And to that end, we recently announced a joint venture with Mitsubishi Corp. Mitsubishi is buying a 15% interest in this project for $8 million. They're getting a very good deal, I believe, but it's still a better deal for us than issuing yet more stock. So, and Mitsubishi brings a lot to the table, I should say. They have a model where they like to own minority interests in operating mines. And so they'll get involved at the development stage, as they are with us, and they will help to get the mine into production. They're looking for offtake as much as they can get. So, but what I'm really excited about is what comes next, because Mitsubishi is a very sophisticated mining investor, and everybody knows that. And out of all of the large undeveloped nickel projects in the world, they've chosen us. So as the car manufacturers and battery manufacturers look around for vertical integration, they're starting to notice us. And, I think the next stage is going to be quite interesting.
Thank you very much, Mike. All the judges, please come back. Thank you very much for the presentation. Yes. Good. Florian. Yeah, Rudolph, you raised your hand first. Now 8 minutes Q&A, please.
Yeah, thank you very much. Mike, I didn't quite get your resource size. You mentioned a figure of 18%. Did I hear that correctly? The grade?
No, our concentrate
Oh, the
has a grade
concentrate.
of
And what
18%
is,
nickel, 1% cobalt. If we had an 18% grade, this
no,
thing
no,
would
I assumed I heard wrong. What is your starting grade?
a 0.22 in situ.
0.22 nickel and cobalt combined, or just the nickel?
That's just the nickel, and it's roughly an 18-to-1 ratio. Both the nickel and the cobalt, 99% of the nickel and the cobalt are contained in one mineral, pentlandite. So it's a
Yeah.
very, very simple deposit.
And the size of the resource?
It's 1 billion tons measured plus indicated, and another 1 billion tons inferred. The measured and indicated will be going up. We've got a new resource estimate coming out soon, and that inferred number will be going up.
And are you going to do further beneficiation downstream, or are you going to sell the concentrate?
That's a very good question. We've modeled selling the concentrate, but what we're also going to be doing, we're going to be doing a pre-feasibility study following the same model as we use, which is basically selling a concentrate to a smelter. But in parallel, we're going to do a bolt-on study at the pre-feas level also of putting in a pressure oxidation circuit at the tail end of the current circuit to produce MHP. And that is because mixed hydroxide precipitates are the chemical form of nickel and cobalt that the battery makers want right now. It's a very hot commodity. You can't make it fast enough. And the payabilities right now for both nickel and cobalt and MHP are in excess of 90%. That's a real market happening right now. We think as more MHP comes on stream, those payabilities will decline to 85, 86%, something like that, but still much better than what a smelter would pay. Also, there's a limited number of smelters in the world, and their number keeps declining. I don't think anybody's ever going to build a new smelter. Whereas we think 5 years from now, there will be hundreds of buyers for MHP or whatever the chemical form of nickel is that people most want at the time. A pressure oxidation circuit is flexible. So we will be modeling producing MHP, but you could tweak it to produce sulfate. You could tweak it to produce almost anything.
John, I think you raised your hand.
I didn't, but I'll take
Oh,
the invitation
sorry.
nonetheless.
Looked like.
Mark, thank you very kindly for the presentation. I'm keen to better understand the involvement of Mitsubishi, obviously a very useful and well-known party to have as a significant investor. You mentioned the 15%. Curious to know, is the 15% with respect to Giga, or is it with respect to a JV? You've highlighted the fact Mitsubishi are interested in the development stage, getting into production and offtake. So equally, keen to understand, does Mitsubishi have a presence on any of the boards within the structure or the management?
What we did, and this is the structure that Mitsubishi preferred, is we created a subsidiary, a 100% owned subsidiary to Giga Metals called Hard Creek Nickel. And we transferred all of the assets associated with the Turnagain project into that subsidiary. Mitsubishi then bought a 15% interest in that subsidiary. So the structure is that we now own an 85% interest in our subsidiary, and Mitsubishi owns a 15% interest. And the money that they put in, the $8 million, is to be used to advance the project to pre-feasibility. And that is, we think, more than adequate to accomplish that task. In terms of the board, the joint venture company has a board. We've got the majority interest in the board. Mitsubishi has a minority interest on the board, and we are the operator.
Okay, Florian and then Simon. Florian?
Yes, thanks, Mark. How much more money and how much more time will you need until you are shovel ready?
that's a bit of a guessing game because of the inflationary environment that we're in, and particularly there's a lot of inflation, around mining costs. And I mean, getting drillers, all that sort of thing. But I would say from where we sit today, something on the order of $50 million US.
15.
And 50.
Okay.
And
50.
that would include the environmental assessment. So to get, permits and a definitive feasibility report.
And time-wise, because it was the second part of the question.
Well, okay, that's a good question. To kick off, it's the environmental assessment that will be the slow part. If it was just engineering, we could do things quite rapidly, given the money. The environmental assessment will be kicked off once we've completed this pre-feasibility study. We will have enough confidence in the model to submit a project description, and that project description kicks off the formal EA process. And maybe you could get it done in 2 years, but that would be extremely optimistic. The best guess would be about 3 years from that submission. So we could be 3.5 years from being shovel ready.
Okay, thanks. Simon?
Thank you very much. In terms of the IRR, I assume that's going to pop out of the PFS. Is that right, or do you have an idea as to what that's going to be at the moment?
Not at the PFS level. I mean, we did at the PEA level, and I have to say that we were extremely conservative with our engineering. The market did not reward us for that. Bay Street, I mean, we've got no analyst coverage on Bay Street. We've managed to fly under the radar, perhaps because we've been excessively conservative with our engineering and with our assumptions about marketing. But that conservatism has served us well in dealing with industry. So, Mitsubishi in their review did not once say, well, that's a bit of a rosy assumption, nothing like that. The engineering firm that they hired for an external review concluded that all of our assumptions in the PEA were reasonable. And from a conservative engineering firm, those words are golden, as you know, you don't do better than that. So, so the PEA, this has got marginal economics at the low end of the nickel price range. But I think because of the rise of EVs, the assumption that Mitsubishi is making and that others are making is that the price of nickel has to go higher to incentivize construction of these larger low-grade projects.
Okay, thank you very much for the questions and also the answers. Let's move to our final contestant, please. Philippe Cloutier. Where is Philippe? Hello, there he is. Yeah, Rudolph, Simon, can you switch off? Thank you very much. Great. Yeah, Philippe Cloutier, President and CEO of Cartier Resources. If you want to share your screen, do it now, please. And then let's get started. Super.
Can you see my screen?
Not yet, but it takes a second. Yes, now I can see it. Super. Philippe, the floor is yours.
Thank you very much. Listen, we have $6.5 million in the bank, market cap of 30 million. We are listed on the TSXV with the ticker symbol ECR. As you can see, the pie chart on your left, we have two major shareholders, Agnico Eagle with 17.7, O3 with 16.6. The Quebec institutions plus the board 8, long-term retail of about 25%, and a free float of 32%. We've recently traded at 11 cents. I think the major news item this year was the consolidation with O3 Mining's East Cadillac project. So we now own a property which covers about 40 kilometers of the Larder Lake Cadillac Fault. And as you can see just off to the west of that, well, that's an equivalent land position that covers maybe half a dozen to a dozen mines and mills. The property is located right by the highway, access to hydroelectric power, qualified manpower, and all of the infrastructure of the mining camp. recently with that expansion, we've gone away with the borders. For the last 3 years, we published 3 resource estimates. This morning, we published a 4th resource estimate. And on that screen where you could see the concentration of historical diamond drill gold intersects, well, that is where we had 2 recent 43-101s, which we consolidated and released this morning. So the gold system that we're tackling these days is what we call the Chimo Mine gold system. Here's a longitudinal composite section where you could see the indicated and inferred resources. You could also see the infrastructure of this past producing gold mine, the shaft and the drifts, and the projected underground development that we intend on doing once we get the PEA and further work of feasibility. We announced a diamond drill program about 2 weeks ago, and the areas that we're going to be drilling are boxed out in stippled red. And after that, obviously, we can continue to grow at depth and along strike. Of further interest, obviously, is the PEA. We had launched a PEA in November 2021. We put that on pause while we've completed the consolidation and upgraded the resource estimate. You can see it's partially completed, and we hope to deliver that late this year, or at the very least early next year. That's it.
Wow, super in time. Thank you very much. So please stop the screen sharing, and the rest, please come back for our last Q&A session then.
Yep.
Florian, Rudolph. Yes, super. Yeah, who wants to be first? The first question? Simon?
Hi there. Just a very quick question. Just looking at your shareholders, I think O3 have got some land near you. Could you just let me know if Agnico Eagle do as well? I'm just trying to think of perhaps logical buyers of your company moving forward.
Absolutely. Very good question. The camp east of or west of us is held by mostly Agnico, Yamana, Eldorado, and O3. O3 have that massive land position that is immediately adjacent to the Canadian Malartic mine. So right now, the current contenders that have resources in the near terms for these producers that have the mills are Cartier, Probe, and O3 Mining. O3 Mining, via the consolidation, wanted to be paid with Cartier shares to be a significant shareholder. Once those were issued to O3 Mining, Agnico raised its hand and exercised its participation right so as not to be diluted. And so we believe that having the Cisco Group and Agnico as sponsors of this adventure is, a good thing.
Thank you. Question. Who wants to be next? Yeah, John, please.
Philippe, thank you for the presentation. I saw that Chimo was previously producing up till 97 in the order of about 379,000 ounces. Keen to better understand why it stopped producing, what it's going to take to get you back into production, and effectively what you believe your management will do better that the previous management didn't.
Good observation. 1997, recall the price of gold, barely $400 Canadian an ounce. It was held by Cambior. They had bought an exploration project at the time for $10 million. They didn't get to producing on that. They bought it in 88, and then they had to sink the shaft down to 920. They had major economic headwinds when they were doing that. So they did not cease production for lack of ore. They ceased production because of the economic situation at the time. What has ensued since then is a tremendous amount, 25 years of mining and metallurgical innovation. I did not mention the fact that we, while we're doing the resource assessment, we did ore sorting tests, not only at the Steinart installation in Kentucky, but in Quebec as well at the Corem lab. And we noted, and we provided that to the engineers that are doing the PEA, that this material can be easily sorted, either underground or with a surface plant, which will have the effect of almost doubling the grade. The PA will also consider both situations, one where we will toll mill it to the mills that are along the highway because of within a 50-kilometer driving distance, and as well building a mill on site. So what we believe this project can do better since 1997 is we have a totally different economic situation, 25 years plus of mining and metallurgical technological advancements. And I may add that Young-Davidson, the Alamos Young-Davidson mine, are mining 2-point-something grams per ton at more than 1.5 kilometer depth. The Goldex mine in the Val-d'Or camp, just right nearby, they've got a cutoff of 0.9 and they're mining 1.5 underground. And the Odyssey project, it's the extension of the Canadian Malartic system, the open pit Canadian Malartic system. Well, they've just recently driven a shaft down to 1,800 meters and with a ramp concurrent, and they're going to be mining 65 million tons of 1.5. So understand that bulk mining underground is something that is done very, very well in this part of the world, especially that in Quebec, you've got hydroelectric power coming out of your ears, and that promotes green mining quite a bit.
Thank you.
Yes, next question. Rudolph, please.
Yeah, Philippe, up to what depth are you planning to mine? Up to what depth did you drill to establish your resource?
Well, we drilled down to a depth of 1.6 kilometers. The next drill program will limit our drilling to 1.3 kilometers. We think that the next phase of work will most likely be done from underground, mostly by dewatering the shaft. And we're waiting actually for the recommendations chapter in the PEA to give us an indication of how to continue to explore this system, which obviously, as you've seen in the slide, continues to grow. You know, in the short term, we're only going to focus on anything that's within, you know, horizontal drifting of that shaft to make better use of that underground infrastructure. So we won't explore below 1.6. We have gone down to 1.3 or 1.6, and that's where the resources that you've seen on the slide are limited to.
Okay, thank you.
Questions? Yes, Florian.
How far will those 6.5 million in cash take you?
The 6.5 million covers all of the drilling, the PEA, and the recent mineral resource assessment, with you know, 500,000 to 2 million left over. We are currently crunching through the remainder of the flow through that we had raised 2 or 3 years ago, and by Christmas we'll still have 4 point something hard cash in the bank. No immediate use for raising cash, especially not at the prices that we're trading at, but we would not like to start dipping into the hard cash.
Question from my side with that Chimo mine. Is that, I mean, that is an old mine, right? Yeah. If I got that correct in your presentation. How can you use that maybe for your work? Do you have old drill core? Can you learn from the old stopes, for example? Does that affect you in the building of your new mine? Does it help you?
Yeah, well, one of the first things we did was to commission a shaft haulage capacity shaft rehabilitation study. And so when Cambier shut this down in 1997, they did it in proper form. So yes, we can go back down into the shaft. The shaft can accommodate up to, without any major refurbishments, 5,000 tons per day. If you need to go above 5,000 tons per day, then you need, because of rules and regulations, to set in metal guides for the emergency brake system. But with the ore sorting situation, we're thinking that maybe it could go down to 2,000 to 3,000 tons per day. So we're more than efficient for that. And indeed, the historical work has been a super bonus because the rock mechanics, metallurgy is quite well known here. And so that really aids into, vaulting the project to the next step.
Perfect. Thank you very much. Exactly 8 minutes. Super. Thanks. Please stay here in the line. And also Belinda, Sam, and Mark, please come back, because now we want to discuss who will win this battle and who wants to get the virtual $1 million. Yeah, first of all, Florian Grummes from Midas Touch Consulting. Florian, to whom you want to give your $1 million?
All right. Yeah, first of all, thank you, everybody. I think we heard from 4 really promising and interesting companies, so I like them all. I also have to be very honest here. In the current market environment, I think all 4 stocks are rather risky and speculative. And however, in the mid and especially long-term outlook, I'm a commodity bull, and I think you should do well with all 4 stocks. However, really looking at it in a detail, I think I go with Sam and Northisle because it's the most de-risked company in my opinion, and it's the most critical commodity, copper. And I'm a gold bug, obviously, and I believe gold will do really well over the next 4 to 5 years. And so my 1 million virtual money goes to Sam. Yeah, that's basically.
Okay,
I mean,
super.
maybe one little add from my side. Technically, I looked quickly at all the charts for those 4 companies. I think Giga Metals actually has the nicest basing pattern. It's been basically going sideways for quite a long time and had a little nice pull up over the last few weeks. So that looks promising. All the others obviously have been suffering due to the current market environment. But I stick with the fundamental, and that's for me the most de-risked is Northisle.
Okay, super. Thank you very much. Rudolph de Bruin, founding manager of AMED Funds. Please, to whom do you give your $1 million? And if you can do the answer a little bit shorter, that would be great. Thanks.
I would go for Giga Metals.
Uh-huh.
I think the nickel environment is very promising. I would caution on one point, though, and that is that I would encourage management to make sure that they investigate very properly producing MHP or one of the other downstream products and not stick to the concentrate only.
Agreed.
Super. Thank you very much. Yeah, then we have John Zadkovich, director of Kingseed, to whom you want to give your $1 million, please.
Thank you to all the presenters. Some very interesting projects. I'm a fan of gold. I'm currently working across a number of gold projects in care and maintenance. So I have a particular preference towards projects such as Cartier's. And for that reason, it's in my experience going to be relatively de-risked given the existing infrastructure and the neighbouring plants. That said, I'm going to split that in the sense I'll throw 750 to Cartier, and I like the fact that Giga has Mitsubishi on board, so I'm going to ride on Mitsubishi's coattails and throw them 250.
So hang on, 750 on Cartier and 252?
Giga.
Giga. Okay, so that's 0.25. Oh, Jesus Christ. Okay, good.
Yes, you're
get
welcome.
that done. Yeah, I need a different computer to do the mathematics then. Yeah, then we have Simon Popple, director of Brookville Capital, to whom you want to give your $1 million, please.
First of all, I thought all the presentations were great, and my decision really is more to do with you know, I put my $1 million in and I want to get it back and I want to make a decent profit. And out of the 4 companies that presented, I feel that Cartier with Agnico and O3, I think there's more chance personally of them being taken over than perhaps the other ones. And therefore, I'm going to put my $1 million with Cartier.
Okay, super. Thank you very much to all of you. Great presentations, as said, and also good questions. So we have a winner, and that is Philippe Cloutier, the CEO from Cartier Resources, because you get 1.75 million And yeah, that is the most here. Congratulations. Yeah, thank you very much. And it was a lovely hour with you guys. Always an honor and pleasure to MC sessions like this. That was the mining pitch battle for Minds and Money and Sector Global. I wish you guys all the best. Stay healthy. I hope to see you all probably end of November in London. Please stop by. Commodity TV will be also there in person, and we will have a TV booth there. So if you have time, make sure that we can do an interview with you guys. That would be great. And maybe we find some time to have a beer or gin tonic together. Yeah, stay healthy. Thank you very much. All the best. And that was the Minds and Money pitch battle. Bye-bye from Switzerland.
Thank you, Jochen.
Thank you, guys. Thank you.
Bye.